Look, everybody saw the headlines last month. The SpaceX IPO just minted over 4,000 brand new millionaires overnight. I'm not kidding. According to an analysis by Hill.com, roughly 4,400 SpaceX employees are now millionaires. We're talking about everyone from top-level aerospace engineers down to cafeteria workers and the guys welding the rockets. One guy, a welder who started back in 2015, walked away with over $1 million in company stock. So obviously, you're sitting at home thinking, awesome, I'm going to open up my brokerage app, grab some SpaceX shares, and ride this thing to the moon. Sounds like the easiest trade of your life, right? But here's the kicker. If you're buying SpaceX stock right now, you aren't joining the Millionaire Club. You're walking straight into a massive financial trap. And Wall Street knows exactly what's about to happen. So basically, the wealth creation event for employees is already over. That ship has sailed. The everyday American investor looking to get rich off SpaceX needs to realize that the real opportunity hasn't even started yet. There's a massive structural market event coming this fall that's practically guaranteed to crash the stock price. And if you know how to play it, that crash is your actual ticket in. Let's rewind a second and look at how those employees actually got rich, because it's super important to understand before you put a single dollar into this stock. Those 4,000 millionaires didn't get wealthy by buying shares on NASDAQ. They got wealthy by taking a massive risk a decade ago when nobody knew if these rockets would fly. SpaceX has this aggressive compensation style, trading high cash salaries for stock options. Elon Musk basically wanted everyone in the building to have skin in the game, so these guys were accumulating equity back when the company was valued at a tiny fraction of what it is today. When SpaceX finally went public on June 12, 2026, it was the biggest IPO in global history. They priced it at $135 a share, giving the company a valuation of roughly $1.77 trillion. Because the hype was so insane, the stock shot up to $225 in the first few days. That IPO totally flipped the local economy in South Texas, too. Down near the Starbase launch facility in Cameron County, average home prices more than doubled to over $280,000. Tech millionaires are suddenly buying up all the luxury real estate. It's wild. But turns out paper wealth ain't real wealth until the IRS takes their cut. Right now, a lot of those early employees are facing an absolute tax nightmare. Exercising their stock options triggers the alternative minimum tax. We're talking tax bills over $1 million for some of these guys. Plus, many have crazy concentration risk, with reports of former employees having 90% of their family's net worth tied up in just this one stock. When you're in that position, you have to sell just to pay Uncle Sam. And when thousands of employees all need to sell at the exact same time, it creates an earthquake in the market. Right now, retail investors are buying the dip around $115, thinking a $10,000 investment is going to turn them into millionaires. Straight up, that's mathematically impossible. For $10,000 to turn into $1 million, the stock has to go up 100 times. At the IPO price, SpaceX was already worth $1.77 trillion. 100x from there means a market cap of $177 trillion. Look, the entire GDP of planet Earth is only around $105 trillion. SpaceX is an incredible company, launching 80% of everything humanity puts into orbit, but they ain't going to be worth more than the entire global economy. So why is the stock dropping right now? It's not really about the rockets, even though that Starship V3 abort in July didn't help sentiment. It's purely supply and demand. When SpaceX IPO'd, they only floated about 5 or 4% of the total company to the public. Everyone wanted a piece, but there were hardly any shares available. Then the NASDAQ 100 added the stock, forcing massive passive index funds to buy billions of dollars worth of shares blindly. Massive demand plus zero supply equaled a skyrocketing price. But that forced buying is over now. And this brings us to the exact catch, the catalyst that's going to send this stock off a cliff, the lockup expiration. When a company goes public, early investors, venture capital funds, and employees are legally locked out of selling their shares for a specific time, usually 6 months. But SpaceX set up a crazy staircase schedule. Between August and December of 2026, about 5.3 billion shares are going to unlock and hit the open market, roughly 9 times the amount available during the IPO. It starts right after their first public earnings report in early August, when 20% of the insider pool unlocks, about a billion shares flooding the market instantly. Then, every few weeks through October, another 7% unlocks, a constant drip of selling pressure. But the real monster hits in early November, when 28% of the pool, nearly 1.5 billion shares, unlocks in a single day post Q3 earnings. Finally, on December 9th, the full 180-day lockup ends. Elon Musk's personal shares are locked until June 2027, so he's not dumping stock, but early employees and VC funds definitely are. Think about the venture capital firms. They invested 10 or 15 years ago for pennies. They don't care if the stock is at $150 or $60. They're sitting on the biggest VC return in history and owe that money back to their investors. Research shows 15 to 40% of unlocked shares get sold in the first few weeks. That's a tsunami of supply, and Wall Street knows it. That's why short sellers are circling like sharks. Currently, over 185 million shares are sold short, 29% of the entire tradable float. Hedge funds placed a $25 billion bet against this stock, making it the most shorted newly listed stock ever. On top of that, algorithmic trading supercomputers see a mega-cap stock below its IPO price and automatically hit the sell button. So where's the bottom? Financial models run by quantitative analysts project that this massive supply will drag the stock way down, bottoming out around $60 a share before the end of the year. That lines up perfectly with Morningstar's fair value estimate of roughly $62. Morgan Stanley even pointed out that this company burns massive cash and won't be free cash flow until 2035. When supply and demand math and fundamental valuation both point to $60, pay attention. So, how do you play this? First off, do not short this stock. Betting against Elon Musk is the fastest way to blow up your portfolio. With 29% of the float shorted, any piece of amazing news could squeeze the stock up 20% in days and wipe you out. Instead, be patient. Sit on your hands through August and September while early unlocks happen and venture funds dump shares. Wait for the stock to get crushed under the weight of that supply. If the stock drifts down to that $60 range by late October, start slowly building a position. But the real generational buying opportunity is in November, when 1.5 billion shares unlock at once. If the stock dumps into the 50s, aggressively load up. By December 9th, when the lockup ends, selling pressure evaporates and institutional buyers flood back in. Let Starlink's global monopoly grow your wealth for the next decade. Don't buy the top of the IPO hype. Wait for the lockup expiration to hand you the discount of a lifetime. Let me know in the comments if you're holding off or buying the dip. Hit that like button, subscribe, and I'll see you in the next one.